I want to ask you about the Ryze fund now, Bill. You have made two very interesting investments in India. Tell me, how does India fit into the social impact vision of the Ryze fund? And how aggressive are you going to go into looking into these nooks and corners of stories that would make sense for the fund?
Well, so the Ryze fund, I founded the Ryze fund with Bono and Jeff Skoll originally, and the whole premise of the Ryze fund is to deliver both financial returns and measurable, auditable impact. And we spent several years doing the work to first figure out whether we could actually underwrite and report on impact, because that's never really been done before. There's been a lot of work done in the impact industry, and frankly, we wouldn't have had a chance of doing what we've done with the Ryze fund if not for all the great work that many of the existing impact players had already done to explore impact and figure out how to do it. But our view was we could do it at scale with institutional capital if and only if we could first create a disciplined way of underwriting and measuring impact. As we did all the work and looked at the sectors where we can be most effective, and we did this with our founders board of some of the most prominent players in the world in impact, it turns out there's lots of opportunity in India to find investments where we can both deliver great financial returns and great impact that's measurable, auditable, reportable. We actually partnered with a group here in India called Elevar, which is based here, was founded here originally in India with Sandeep and Maya, and have a substantial team on the ground here. So we have a real presence. In addition to the TPG growth team, we have that organization as well. So I'm bullish on it. Our second deal in the Ryze fund was Dodla, which is a fascinating business, and there's much more to come.
Okay. Tell us about the two investments that you've made so far. What was the whole process in selecting these two investments, and what will the process be now? You know, what are the areas that you're going to be looking at right now to be able to drive them further?
So the sectors that we're most focused on in the Ryze fund are historically the same sectors we focused on in growth with the overlay of impact measurement. So a deal in the Ryze fund has to be the same kind of deal we do in the growth fund from a returns perspective, but it also has to have a minimum level of impact that we can underwrite and ultimately report on to our investors. And we've committed that there's a minimum level, otherwise it can't be in the Ryze fund to our LP, our institutional investors.
Okay.
So the sectors are healthcare, obviously, where we've had a long presence as a firm. It's tech horizontally, because tech applies to financial services and education and media and all these other areas, but when it's impact tech, consumer, where it's impact as well, food and agriculture as a core sector, which obviously Dodla would be a good example of, and then education. We will do some growth infrastructure as well. Think of our investment Apollo Towers in Myanmar, which was a wireless tower company. That kind of thing can have significant impact and also be quite attractive as a financial investment as well. So these are the sectors where we're operating.
Is social entrepreneurship in India picking up? You know, if you've seen, I think the last 2-3 years, things have changed in how we used to look and how investors used to look at social entrepreneurship. It was largely a not-for-profit. You haven't really seen returns come in. So a fund like this investing in India, was this the reason, a pickup in the entire landscape, and is that changing even further now?
There have been a number of challenges in the impact world historically. One has been this notion that you have to compromise on returns in order to have impact. And some people, I was at a meeting in Delhi early on in which one of the folks there involved in the social impact bond movement declared that it was unethical to make more than a 5% return.
Exactly.
Right? As an ethical issue. So there's been this notion that you can't generate great returns and have significant impact. In reality, as we did the work to actually, the beauty of being able to quantify impact is you can figure out whether that's true or not. And it turns out some of the most impactful companies in the world are also the most successful companies in the world. And the two are attendant. So there's a collinear relationship. If you're measuring the output of a business and it's the output of that business which is creating the impact. By definition, the business has to be successful to create the most impact. So first of all, getting to a place where we could actually underwrite impact in a way that isn't religion, that isn't political philosophy, but instead is hard facts, was critical. The second was that there weren't historically mainstream large institutional investors like we are that are sort of clear-eyed about returns doing impact investing.
I don't think there is a specific fund. I mean, there are a few, but I haven't seen a large-scale fund that is focused.
No, we are by far the largest in the world now, and we're, you know, it's a brave new world. And by the way, what's interesting is that we work closely with the other impact players and want to help them scale as well.
Okay.
One of the things we've done is brought major institutional capital into the Ryze fund that have never historically invested in impact. And their view is they're getting the best of both worlds. They're getting the same underwriting that we've historically done in growth, but they're also getting impact. And they're all quite interested in seeing how we do this. And if we do our job right, which I'm obviously committed to are doing it right, we will hopefully scale the entire industry, because we've committed that the impact measurement system that we've developed, we will make available to everybody. So if you're I mean, these smaller players couldn't possibly have spent the money, time, resources to develop this kind of discipline. We also brought KPMG in as our partner to do the auditing of the impact. So they will provide assurance around it to our investors as well. And that whole system then will be made available for others.
Okay. Okay. How long do you think it will take for the entire deployment of that $2 billion? What's the timeline that you're giving?
We typically invest over a 3-year period. You know, 3-4 years to invest.
Is there a case to further scale that up over a period of time to look at another round of funding?
I've been so wildly pleased by the way millennials and entrepreneurs have responded to this. You know, there is a zeitgeist at the moment around the idea of being able to do well by doing good, and an understanding that these scalable, profitable, sustainable models are really the hope. This, at the end of the day, true north for us is the UN Sustainable Development Goals. The entire world got together and agreed there are these goals that we have to achieve by 2030 to have a world of the sort we want our kids to grow up in. And that cost is $40 trillion of investment capital. And the gap every year is $2.5 trillion. So we have no idea where that money is going to come from as a world. We just know we need it to achieve the environmental and social change necessary to make the world a place we'd all want to live in. So the only hope really at the end of the day is to reorient corporate investment, private equity investment, government investment in a way that is held accountable to this kind of a standard where we can measure whether it's working or not, and ultimately attract more capital into these important sectors.
Okay. Thank you so much, Bill, for talking to us. Always a pleasure to have you with us. And thanks for taking out this